You're listening to Pod 99, a podcast by Wealth99 that helps the 99% take control of their financial future. We talk to experts from across the alternative asset space who share their insights on new wealth, how to build it, and how to keep it. Let's get on with the show. Hey folks, Andy here. Welcome to Pod 99, a podcast where we talk to experts from within Wealth99 and from across the alternative assets space. Experts who are here to share their insights on new wealth, how to build it, and how to keep it. A special show today. We're actually recording this on video, so you can listen to the podcast as an audio podcast on Apple Podcasts or in Spotify. Fine if you want to do that, but I've got Dave the Wave on the show. He's a technical analyst. He's a Bitcoin chart guy. So we're publishing the video on the Wealth99 YouTube channel, so you can see Dave chart Bitcoin on his logarithmic growth curve. So if you can watch the show on YouTube, certainly recommend that you do that. Anyway, time to get on with the show. My guest today, of course, is Dave the Wave. He's a pseudo-anonymous investor. He's a Bitcoin technical analyst. He's a contrarian. Welcome to the show, Dave.
G'day, Andy. How you doing?
Hello, Dave. I am very good. I'm very good. Now, it's a pleasure to have you on the show, Dave. The reason I wanted to have you on the show is because I think you have a really unique insight into Bitcoin. Bitcoin, of course, is one of the most important alternative assets in the world. Perhaps, in my view, the most important asset in the world, especially at this moment in history, if you like. But you have a unique insight into Bitcoin in terms of its chart history and perhaps its potential chart future. And of course, this is based on your famous logarithmic growth curve chart. So I think perhaps at this point, Dave, we could get you to share your screen, and then we can talk a little bit more about that, and we'll get some background. But do you want to just jump in and share your screen?
Yep, sure thing. All right, so here's my my chart here, looking at the LGC, for short, the logarithmic growth curve. I've been looking at this for quite some time, maybe going on to 3 years. 5 years now, since 2018. I first charted this at the end of 2018 with that last capitulation there that we all saw in Bitcoin at the end of the previous bull market. But the idea here is that besides looking at Bitcoin as an asset, the idea here is I would look at it also as a currency. And what I think is going on here with this is a logarithmic growth curve. It's a force of nature. You'll see it in a lot of things, where you get this explosive exponential growth at the beginning, and then it sort of slows down and eventually plateaus out. And I think what's technically it lines up on the chart really nicely. But I think what's going on here is we're seeing a currency, Bitcoin as a currency being capitalized in the market. And, as people often, most were looking at Bitcoin as a inflation hedge, which is great. It is an asset, something that people trade, something that people invest in. But I think even primary to that is it's a currency. And that's what, Bitcoiners have always said, right? Digital gold. And you're getting this capitalization of it, and it's the gains will slow down, the returns will slow down, but they're still pretty bloody good. It is a bit problematic. One problem with the LGC is this plateau at the top, which a lot of people don't like. If you're a hyperinflationist, you expect it to keep on going, right? like the S curve or whatever. But I think as long as you've got exponential growth, this LGC is relevant, because all you need to measure it is a relatively stable currency, USD. So if we look at our our y-axis is price, and that's in USD. So USD doesn't have to be perfectly stable. It has to be relatively stable, and it can measure these exponential prices. It can also measure this logarithmic growth curve. I think at a later date, when the price increases of Bitcoin become similar to something like gold, which gold is depreciating 10% per annum, year on year on year, that's 10% compounded over decades. It's depreciating 10% annually against gold. I think when you see that kind of, on the flip side, that kind of appreciation of 10% in Bitcoin, then this plateau will change, and you'll see it doing more once it's capitalized, like gold is fully capitalized. Once Bitcoin is capitalized, it will also show that kind of continual increase. It'll be more stable in a macro sense. But that's a good few years out, right? I think these prices, the next cycle or two, these are exponential increases.
Yes. So what you're talking about, Dave, is one way to view Bitcoin is as a nascent currency in the process of capitalization,
Yep.
and that certainly that explains the volatility in Bitcoin as new speculators or new investors, new businesses come into the market with their capital. So the market cap of Bitcoin increases, and we get that bull run cycle, and then the Bitcoin price gets overheated, and of course we get a crash, and people take their capital out of the market, and then the cycle continues. This is just a super simple way of explaining it, but each time the market cap is subsequently higher as more participants are in the market. And this is actually happening very, very fast for a new currency when you consider that Bitcoin has only been around since, late 2009. So about a decade and a half, which is pretty impressive where Bitcoin has got to already. What I'd like to do, Dave, though, is I wonder if you can zoom in to the chart in terms of where we are now. And just talk about the buy zone, which of course is the shaded area of the chart. So that's the shaded area at the bottom of the channel. Then, so are you able to zoom in a little bit so we can see where the price action is at the moment?
Sure. All right, so that's zoomed in a bit there. So I mean the LGC performed pretty well off. I sort of put this chart together. These curves have been on the chart since the end of 2018, and it predicted that price wouldn't carry on to 100, 200K. Whereas at that time, I think it was the only model sort of, showing a bit of caution where the market was getting overheated, and sure enough, it came back off. And it also predicted
2021. So you're talking about the highs in 2021 as it got to the top of the channel there. You were one of the few analysts saying perhaps this is looking like it could be near the top of the run for this cycle.
Yep. Yeah, it wasn't very popular, but hey, it was the LGC. I've got to stick to my model, right? Live and die by my model. Anyway, and then it came off, and it was all doom and gloom. And I said, look, I think we're going to find support here in it's the buy zone. I think some people like to refer to the accumulation zone where you can accumulate Bitcoin. So I did all my accumulating back here and here, and bought in here, got a bit caught out in here. I did a bit of a double up in here, rebought here, a bit of buying in here. So I've always advocated having a good solid core in Bitcoin and hold on to it as an investment for the longer term. And once again, if the prediction was, price coming back to the buy zone, and sure enough, it has, and it spent a lot of time in here. So if people were prospective investors were looking to buy, it's been, this looks to have been a pretty good spot to buy over a period of time, buy a few tranches, and we're still in the buy zone. And I mean, price seems high today, 28,000, but I think we get hung up a little bit on those numbers. In percentage terms, it's not a huge move, And if we look at it on the chart, we don't think that's a huge move. And in a percentage, we've got 85%, and we've got a similar move here, right? 80%. So there's plenty of room to run. It could go on another runner like it did in 2019. It might not. It might sort of come back in and track. I tend to think it'll be more volatile, and these big cycles or nice clean cycles will break up. And it wouldn't surprise me to see it go on a runner. A lot of people will be buying here, and then we get another correction, and then bull market proper.
Well, can you zoom in more, Dave, to where we are now, so it's more you can really see where we are at the moment on the LGC. And what's interesting, of course, is, as you say, we are. Thank you. That's better. That's nice, Dave. Thank you. You can see that we are still clearly in your buy zone, and we have been in that buy zone for a year. So as you've said, this has been a good time perhaps to accumulate Bitcoin at the lower prices, and it's not too late. You're still able to do that. I think it's clear, you want to buy when Bitcoin is at the bottom of the channel, and you want to be more cautious, of course, when Bitcoin is at the top of the channel, when Bitcoin is starting to get overheated. What's interesting, Dave, of course, right now, as Bitcoin is back above $28,000, it feels like for the first time, Bitcoin is starting to play that role of a safe haven asset, because there's potentially murmurings of a possible banking crisis in the US, as scary as that may sound, in which case, Bitcoin and gold potentially have that safe haven a role to play. But I wonder if you just want to talk about, possible paths forward for Bitcoin from here as the next cycle plays out. Looks like there's a lot of room above the buy zone in the chart in the years to come.
Yeah, yep, sure thing. I do tend to often zoom. My charts do tend to be zoomed out a bit because it gives me some perspective and some comparison to what's going on. And, this was what we saw in 2019 was a huge spike, and something similar, it would take Bitcoin back to previous highs, but it would still only be halfway up on the LGC channel, on the greater channel here, which is, I find, quite interesting. So, we think these numbers are really big, but actually in LGC terms, they're not, and if the LGC is anything to go by, a model that has performed pretty well, then, you've got a reasonable spot to be buying in. You could buy, if you don't have any Bitcoin, why not buy a bit at the top of the buy zone? It might come back. You can buy another tranche. At a later date, you can buy another tranche. Because the reason why you would want to buy a bit if you didn't have anything is it could go on a runner. It could do a ripper straight up here. And it wouldn't surprise me. But then I think there'll be a correction. And my favorite scenario, I'm speculating here because, it's pretty hard to say, the model's one thing. It gives you a range, a relatively restricted range within which price will develop over the years. But when you're talking about shorter term price predictions and volatility, that's a lot more speculative. But my one scenario I am considering is you have this run up, you have a correction, and back to the buy zone. But notice this buy zone's getting high. It's moving up pretty quick, and correction to a decent correction, and then the big run. So maybe next year. So we have a mini bubble this year, a correction, run up, correction, and then the big run next year, maybe 2024, is this move up into the 6 digits that everyone's been looking for. Right. And that would actually, to me, it makes sense. It chews up the width, the depth of the channel, and the width of the channel. And from a market sense, it makes sense too. You pulls in a lot more participants, you get your correction, and then the big run.
Yeah, fascinating, Dave. And I mean, it's interesting to me because, Bitcoin originally was effectively born out of the GFC, the global financial crisis of 2009. So we had, against that backdrop of bank failures, government bailouts, and quantitative easing, Bitcoin was quietly deployed into the wild, where it was pretty much ignored, apart from a small group of computer scientists, geeks, and idealists. Of course, a decade and a half later, perhaps not, we are on the brink of a second major global financial crisis, and now, of course, Bitcoin is perfectly primed to be one of those hedges, as I said before. So yeah, I think it is really interesting to see Bitcoin responding, really going from that sort of bottom last year. I think it was about November last year, wasn't it? We hit about $16,000, and as you say, pretty much doubled already to start the year. So that, do you think it's fair to say, Dave, is that the bear market over? Is that the beginning of a potential new uptrend, or is it too soon to say?
No, I think it's over. We've had a extended correction here, basically a 2-year correction if we take the first peak, or a solid year if we take the second peak. It's broken this longer term downward diagonal of resistance convincingly. It's making, from a local price sense, it's making a higher local high here, a higher local low here. So this is all looking good. The base is put in a solid base. This is nearly a year. June last year. We're getting up towards June now. Putting in a solid base here. Yeah, I think it's looking. I'd be surprised if the correction is not finished.
Interesting, Dave. So there you go, folks. You've heard it from Dave the Wave, one of the crypto ecosystem's premier Bitcoin technical analysts, I think. So potentially, yeah, the beginning of a new bull market. So I hope that perhaps gives some people, confidence that is safe to start considering Bitcoin again as an alternative asset. Another data point that is interesting, of course, is the next Bitcoin halving, folks, is coming. I think it will be around April next year. Whether or not the halving has that same impact on the price, I mean, that's just one of those esoteric existential questions in crypto. But like it or not, the Bitcoin halving does just mean the number of new Bitcoins coming into the system each day is halved, and Bitcoin, as a result, will just continue on its journey to becoming the single most scarce digital asset on the planet. And as more and more people recognize the value in that, well, it's just hard to see not more demand eventually uplifting the price of Bitcoin on the long term, Dave.
Yeah, for sure. Yeah, I think the halving still has a role to play. I think, as the Bitcoin market becomes increasingly mature, that role will be less and market price will take over. And it's scarcity per se that will be the driver of price and market speculation, not the mechanics of halving. And but I think we're probably in this transitional phase where it still has a role to play, and it lines up pretty nicely with this idea of a decent move, up here, up to the mid range correction, and most halvings have come just after a low, haven't they? Once the lows sort of put in, and
That's right. So, thank you, Dave, for plotting some potential path forward
highly speculative
on your chart. Highly speculative, but just for context, so if that's potentially the next high towards the top of the channel, so when's that? That's sort of late 2024, early 2025. And what kind of numbers are we talking here? Just speculate away.
So, like December has traditionally been a boom year, right? So that peak would line up with the end of the year, and price, I don't know if it'll hit the top of that channel. Like previously it didn't. So I'm kind of thinking 180,000.
So 180,000 US, potentially, just rough numbers for the potential top of the next cycle, and that's December-ish, 2024-ish. So,
that's a pretty good return. That's still 1,000% off the bottom. Realistically, if someone was buying in the buy zone here, that this might correct back to this. We had horizontal resistance. Maybe this becomes support before we get the run up. So realistically from a price point there, that's still 7x. That's pretty good. And remember that even with the correction, that price might come off, but that LGC curve is trundling on up, So as a long, you could trade a little bit, but I mean, I advocate hanging on to a core of Bitcoin because you never know what's around the corner. So they're pretty good returns. And if you were holding on to a position from back earlier on, a few years' time, you've got life-changing returns there. And say you're a new investor coming into the market, you're buying around here, you'd hold on, and there's 1,000%, So you'd want to, it's tricky. You want to put enough money in to make these returns worthwhile or almost life-changing without betting the farm. Because you never know, right?
That's right. And well, I wonder if you can just maybe speak to that then, Dave, how, because at Wealth99, we sort of always talk about, this wealth builder mindset for the long term. And I think that's what you're talking about as well. There's, in some ways, it's a position somewhere in between the trader mindset and the long-term investor mindset. But I think for the vast majority of people buying Bitcoin, certainly people that are buying Bitcoin or crypto assets for the first time, the sensible approach is definitely to have that long-term time frame in mind. And if you're not confident, the easy way to do it, of course, is just the dollar cost average approach. You buy a little bit every week, set and forget. Perhaps if you're a little bit more adventurous, like perhaps what Dave is talking about, and you can jump in here, Dave. What do you mean by sort of having the courage and the conviction, if you like, to buy enough to make it worthwhile without betting the farm? Because I think, that's the key point here.
Yeah, I mean, it's I think it's getting a balance between you want to get exposure to the market, and I just want to add that I can speculate about the direction of price. I'm more confident that price will stay in this channel without giving a specific track within that channel. But coming back to your point, you want exposure, but you don't want to be overexposed. So you've always got to be, you don't want to play it too safe. Markets are risky, and you want to have some exposure to the markets, risk reward, without getting too greedy where you can get bankrupted or wiped out by the market. So a large part of my approach is hedging. So, you buy your core Bitcoin, and then you're almost obliged to trade the volatility for USD to hedge against core Bitcoin, because there's no guarantees in life. So, I mean, I've got a model and I have confidence in it, but I don't have certainty in it. So, I think, people frown on trading, but if you do it the right way, it can be a very useful hedge. And then you can accumulate USD profits without selling your Bitcoin. Because a lot of people, they'll talk about accumulating Bitcoin, but they never talk about actually taking profits. And what this is all about is realizing profits in real assets in the real world that we can all enjoy.
That's right. Very well said, Dave. All right. Look, it's been a privilege and a pleasure to have you on the show, charting Bitcoin for us. And I'm not sure if I mentioned this, listeners, at the beginning of the show. Perhaps I should have, but obviously we've been talking about Dave's chart. So you'll find these charts on the Weath99 YouTube channel. So if you've been listening to the podcast on Apple and Spotify and enjoying the show, well, I'm pleased to hear that. But, if you want to listen along again and actually see Dave's charts, then the best way to do that, of course, is to watch the video on the Weath99 YouTube channel. But of course, we'll link to that through all the social channels and so on. So I'm sure people will be made aware of that. Dave, look, just as we start to finish off, please feel free to give a shout out to your website. Okay, I know you've got a newsletter, your Twitter handle, all that good stuff. How can people follow along if they want to delve a bit more into the thesis behind the LGC and so on?
Yeah, sure. Look, just one point there, Andy, before I do that, is that a lot of people get a little bit hung up on the LGC not hitting $1 million.
Yeah, sure.
Right?
Yes. Okay, well, please, this is a great point. So I'd love...
Yeah, and I just wanted to retouch on that point.
Yes.
That I did look at it earlier.
Yeah.
That I think at some point this LG will become redundant. So as long as you've got exponential prices, like in this area here, that it'll work. But at some point when price starts to... once this is well capitalized, getting up towards market cap of gold, the depreciation of USD or the hyperinflation narrative will come into play, where this sort of no longer, you don't have the exponential, you have good gains, but not exponential gains. And that LGC can no longer measure that. So the plateau, this price will go above $1 million, I think, but that'll take time. And that'll be saying more about the USD. And then you'd really just be looking at Bitcoin against gold or some new currency.
Yeah, look, that's a great point, Dave. And it does speak to exactly what is going on right at the moment. And I guess the worst case scenario in the Western banking system, particularly in Europe and, of course, the US, if a few more banks do start to topple, and, God forbid, there are digital banking runs, which can happen very quickly in the digital world that we all live in. And then, the Fed will turn on the money printer. They've already said, they've come out and said that they are prepared to guarantee depositors in the banking system, which is a good thing, of course. But if they do that, then they're going to have to effectively print all this money to cover all that. It's trillions and trillions and trillions. And so that is the thesis behind the potential for hyperinflation of the dollar in that kind of situation, which of course would probably put assets such as Bitcoin and gold, they would appreciate significantly and very, very quickly. So it's kind of, black swan events like this that would cause potentially your model to look too conservative, but we're not there yet, Dave.
No, and it's the instability of everything. To me, that's the key word, instability. And that comes back onto the currency with all these shenanigans going on. And that's why, and Bitcoin is a beneficiary of that as an alternative currency, a nascent currency. It is about being an alternative currency, just like gold is. But it's still got a fair way to go to be capitalized.
Yes, but it's another way of just saying perhaps it's good just to have a little bit of a core position in Bitcoin, just as a hedge against some kind of black swan event happening like that. Because the reality is, hyperinflation does happen very quickly. So if something goes wrong, things can happen really fast. And Bitcoin, we've seen how Bitcoin can move extremely quickly in bull markets and leave people behind. So you can imagine the speed at which it might move if something really does go wrong in the global financial system and enough people think, oh, we've got to get to Bitcoin real quick.
Right. Yeah, I mean, just as the traditional institutional investors would have part of their portfolio in gold, 5-10% in gold, the big boys, they would also be wanting to put 5-10% into Bitcoin as digital gold. It's kind of a no-brainer. And then, I recommend doing more than that for us retail investors and whatnot, playing, putting, I don't know, up to you. It depends how risk averse you are. For me, I'm gonna put a lot more in and play around with. But even from a conservative, pragmatic perspective, it's a no-brainer for people to be putting 5 or 10% of their net worth into it.
There you go, folks. Not financial advice, but something to consider. 5 to 10% is perhaps the pragmatic advice, as crazy as that sounds in today's world. You've got to protect yourself. You've got to hedge yourself against the uncertainty of the modern world. Dave, I said we'd give you a chance to finish off just by shouting out your website and so on. So we better let you do just that.
Sure. Okay. So I've got a couple of things going on. I do a newsletter once a fortnight and look at the macro, enjoy the writing. I think a lot of my followers enjoy reading, taking a bit of time out and reading an article. They're not too long. There's quite a few of them there. I looked at BTC and the accumulation zone. A lot of them are about the macro, about market psychology, about the charts. And that's an option that can be found you can find that on Twitter. I often post that on Twitter. My Twitter is at davethewave.com, but there's no E in Dave. So it's davethewave.com. You can find me there, and you can find my, on my profile, you can find my Substack, davethewave.substack.com. For those that are more interested in trading, I also do a alts page, and this can be found online, once again on my profile on Twitter, or at davethewave.com, once again without the E. And here the focus is on, I do extended threads. There's a lot of history on it. There's a lot of charts on it, and charting the altcoins or the volatility of the altcoins, primarily as a hedge, making USD profits, skimming some of those profits into real wealth. and focus also on the strategy, trading strategy, and how to make reasonable gains going forward.
Excellent. Thank you again, Dave, for sharing your insights into Bitcoin and charting the LGC live on the show here on YouTube. So fascinating as always to get your perspectives. Thank you, Dave. All the best and bye for now.
Okay. See you, Andy. Bye-bye.
All right, folks. Well, there you go. Dave the Wave live on the show here at Pod99, charting Bitcoin on the LGC for us, potential paths forward. What do you think? Always hard to know, of course, exactly where things are going. No one can predict these things with any certainty, but just a fascinating time in the world, I think. So, as discussed, I think a growing number of people, investors around the world, are waking up to the potential of a new wealth and the power of alternative assets to just, perhaps even just as a little hedge against the US dollar, against something major happening in the traditional financial system. So it's up to you as the individual investor to decide for yourself what is the right path forward. Is it a little bit of your net worth in crypto assets? Is it a little bit of your net worth in tokenized precious metals? Is it a little bit of both? Of course, you know that here at Wealth99, we can cater to you in terms of providing all of those alternative assets. So something to think about, certainly, in this increasingly turbulent world that we live in. Anyway, that is today's show. I do hope you enjoyed it, folks. Thank you for being here. Thank you for listening or watching here on YouTube. Please do subscribe to the Pod99 podcast in whatever podcast app you are using, Spotify, Apple Podcasts. Hit the subscribe button. Even please give us a 5-star rating. That would be appreciated. We're a new podcast, so all that stuff helps. Hey, thanks for listening, team. That was today's show. Bye for now.